Welcome back to another episode of Multifamily AP 360. And today's our guest is Scott Kate from AT Real Estate. Welcome, Scott.
How you doing? Thanks for having me here, Rob.
Sure. And little bit about Scott. Scott Kate has been a multifamily real estate investor for the past few years. He's invested in multifamily apartment syndications in Ohio, North Carolina, Texas, and joint ventures in Florida. He also runs a monthly meetup group, AT Real Estate Investors in Florida, Fort Lauderdale, West Palm Beach, and Stewart in collaboration with, I think, South Florida Real Estate Network and Real Estate Queens. So, with that, Scott, you want to add anything?
No, that about covers it. I also started a podcast, the Captain Investor podcast, recently. It's something I really enjoy doing.
Awesome. And you have some maritime experience, right? So, from captaining ships to investing in real estate. So, what inspired you to transition into multifamily investing?
I'm working on yachts as a captain and just on the yachts in general. It's a very unstable business, like a lot of other businesses. So I was always doing something on the side to supplement my income because it's not a matter of when the job goes or if the job goes away, it's when. And it's one of those industries where it's gone today, here today, gone today. Same thing. Because I worked in the tech sector in the 90s and it was the same thing. Things start and fail and start over very quickly and rapidly. So if you don't have a backup plan or something to stabilize you, then it can be very difficult, especially when you have a family and kids and stuff to support. You don't want to be out of work.
Yeah, sure. Good points. Thank you. So, you have invested in syndications and joint ventures across multiple states. What's your investment strategy and how do you choose the right deals?
For me, it's because I focus on mostly raising capital in the capital markets, debt and equity. What I focus on for me is we heavily look into the tech sector, where they're moving, and corporate heads where they're moving. Because usually with all those movements, a lot of jobs and a lot of population moves there. In Texas, you're seeing that. Ohio, you're seeing that. And for me, my due diligence is heavily on the sponsor, who is the sponsor of the deal. Because I also invest as a limited partner and a general partner. So who I partner with and who is running the deal is very important. What's their track record? What's our strategies aligned? Are we on the same page? Those things are very important to me, and I think that should be very important to anyone investing in anything, really. You have to know what you're getting into, and who, more important, is who you're getting involved with.
Yeah, thank you. Those are good points from sponsor's point of view and also market point of view. So what other things you look when you're speaking, partnering with your sponsor? What other things?
What is their track record in that particular market? Have they done a lot of deals in that market? How many years have they been in? Do they have any things in their background, any defaults, any criminal activity, any those things are very important. If they are having deals in trouble, why? Because you're seeing some of that right now, and what looked good 3 years ago, what worked 3 years ago probably may not work right now. And it's maybe they did their due diligence and they didn't anticipate in 3 years the rates going up 3, 4 points. If that's the case, then maybe give them a little leeway because that's we didn't foresee a lot of those things happening. At least I didn't, but that's things like that where their track record is very important. Who they've partnered with, who's on their team, is the team always changing, or has it been the same consistent people for a long time? What's their communication? Because what I found is how they communicate with you in the beginning is how they're going to communicate with you throughout the whole process. Because if you're going to be involved with these people probably 5 to 7 years, it's not going to be a quick turnover. It usually isn't. So you want to make sure that these people are telling you all the good, the bad, no matter what. If because for me, I'm okay with if things because life happens, things go bad sometimes. Just let me know what's going on. I took the risk. I had confidence in you and your team. Just let me know what's going on. That's very important to me because we have to know what's going on. I'm more if someone's communicating with me, I know that they're they're doing the best that they can to make it happen for me and for the rest of the investors.
Yeah, sure. Thank you. Thank you for elaborating on that. So, what are some parallels between the maritime industry and real estate investing?
What we do on the yachts is we manage the asset, we manage all the projects, we manage the crew, the team. It's very similar in that aspect because it's really about the people. It's not, it's the property is the property. Same thing with the boats. All those things are very logical. We can fix any of those things, but if we have a people issue, we have to manage the people accordingly, put the right person, maybe replace that person. Those are the things that are very important. Make sure that your team is running efficiently and then the right people are in the right places. Those are the things that are very, very important, and they're very similar because we're managing the asset, we're managing the people. Although on the yachts and everything, we lose money. We don't make money. It's a toy. It's an entertainment piece for someone. Although with the charters and stuff, we do have to budget and everything. We're talking usually for a lot of these yachts are millions of dollars in budgeting. So it's very similar in that aspect of the apartments and multifamilies. We have to track and measure all the costs and make sure that we're profitable for our investors.
Yeah, thank you. So, what skills from your previous experiences, like IT industry or in maritime, skills are translating into real estate investing?
The skills I see is the management and the people skills. They're very much the same. In the yachts, we negotiate contracts. We negotiate the shipyard period, which our time frame is yesterday when we have to get things done. So our speed of execution is the timelines are very short. Sometimes we're doing on this particular vessel I'm working on now, we did a couple of $1 million worth of work in under 2 months. We had to move at a high speed and have a lot of people on the boat all the time. Project management and just keeping track of people and the costs are very similar because you have to keep that under control or else the program will get shut down. And on the apartments, if you go over on the cost, that affects the resident experience and that affects the investor experience. Because if the residents are not happy with all the construction going on all the time and stuff like that, it will affect the turnover, which will affect the investors.
Sure. So, for how many deals you have invested or raised capital?
For raising capital, I've raised on quite a few deals. I would say over 10, quite a few of them. There's a few of them that didn't go through just for the last couple of years have been fairly tough because raising capital has been, people have pulled back and are very fearful and hesitant, but I think it's turning around. But, a lot of deals didn't go all the way through, did not close. I had a few deals that didn't close because certain things were found out in the due diligence period that there was a retrade or a renegotiation of pricing and they didn't go through because we couldn't come to terms. And that has happened a few times. And I'm hopeful for this year because there's a lot more deals happening and there's a lot more things where the prices have corrected quite a bit, especially in multifamily where prices are much more realistic. So it's looking good. I think so.
Yeah, sure. Thank you. So, from capitalizing point of view, what challenges you faced so far? How did you overcome them?
The challenges I faced are just a lot of, especially with retail investors, just people being very hesitant and fearful, especially last year being an election year. Everyone gets very on edge. And well, I was hoping that with that passing and the election being gone, now people are still a bit fearful because there's certain things in the economy that could be considered very shaky. But I think what I've had to do is just double down on the education aspect that this is a long-term deal. These apartments and things we're investing in are gonna are going to we're going to be involved much longer than the presidency. They're going to last, and People need to live somewhere. We will outlast the presidents or whoever is in there. It doesn't matter. We we will do our due diligence and our job to make these things happen for the investors. What people need to realize is, and what I need to make more clear to everyone is that the education aspect of this multifamily will always be a very strong asset class and real estate in general, because we all need to live and work and do business in places, and that comes with the people and that comes with the real estate. And there's such a shortage of the amount of units out there that the only way that rent will come down or the prices of things will come down is if we build a lot more.
Yeah, sure. It's similar kind of question. So what's your take on the current real estate market and where do you see the best opportunities?
For me, I see a lot of opportunities in multifamily just because over the last couple of years, the prices have corrected up to 30% in some areas. Granted, it spiked up 50%, but I think with it moderating like that and rates being where they are, I don't consider them high. But historically, they're not high. They're about the average, maybe a little bit above or below, depending on the day. But I see the opportunities with the pricing and everything and these loans getting reset. There's opportunities where we can get some buy-in to a lot of different stuff that are on a good cost basis, a good price that will be good for the investors. Although the financial side of it, the loan to values are about 60 to 70% now, which historically that's decent. You just have to raise more capital. And with the prices being where they are, there are going to be some good long-term holds.
Yeah, sure. And how do you handle the uncertainty and the risk in investing?
As I alluded to before, the risk is based on the sponsor and the team. If you have a great team, they can get through anything. It may not be pretty, but we'll make it through because, like I said, these multifamily assets will outlive any political environment. Once this president, last president, or what have you, this is a long-term thing, and you should always think of everything as a long-term deal. You shouldn't, if you're in it to make short-term gains, you're probably not going to make the right choices. Because a good friend of mine said to me a long time ago, with any money, you have a time and a purpose for it. And the time and the purpose for real estate is long term. And the purpose is long term wealth generation and income.
Yeah,
For me, it is.
absolutely. So what's your goals or what are you planning for next 12 months or next 3 years, 5 years?
This next year we're working on some development deals in Dallas. We're starting a fund for that and some other deals we're working on in Houston. And I'm very bullish on Texas and Columbus, Ohio. So we're keeping an eye on those areas, focusing on closing a few deals this year with the fund and other stabilized assets, focusing mainly on deals that are more in line with institutional capital and that are more stable assets. I'm staying away from a lot of the large value add and repositioning deals because just with the environment, with the tariffs and labor, immigration and stuff, I don't know where if there's going to be a shortage of labor. So as we've seen over the last couple of years, a lot of these large rehab projects have stalled out or taken quite a bit longer. So buying stable assets, the returns might be a little bit smaller, but they're very stable and it's less of a calculated risk. And then over the next 3 to 5 years is to build out the fund to where we can continue to offer great products and stuff for our investors and residents and just keep building on that. And that for me, the long-term goal is to have something to pass on to my kids and stuff, long-term wealth, to where they can do things that they're passionate about and go and add value to other people's lives.
Awesome. And would you elaborate a little bit more about your Dallas project, development project?
Sure. Right now, They're in the southern part of Dallas in the I-35 corridor. We have four projects coming online that have each of them are three stages of 120 to 130 units. The reason why the focus is on that particular amount is because the developer we've partnered with, he was building 250, 300 plus units in Kansas City, and the the pre-lease on those once they're built out is 18 to 24 months. But with this particular amount, the pre-lease can start at about 9 months, so that once they start doing that, they can have them partially leased up by the time they're completed and then move to the next one. So the capital can move a lot faster, and then you can offer better speed of execution for the investors and a better value, better returns, better turnover. Their velocity of capital is a lot more. It's there's four of these projects with three stages. So each stage will be roughly a year to 2 years and either sell or refinance. Each project will be roughly 360 units. So there's four of those coming online, and we're very bullish on Dallas. It's a very high growth market with all the tech and just high finance in Dallas, oil. There's just so many great things happening in the Dallas market. I know a lot of stuff has come online recently, but that has all been absorbed. Just proof that the market is very strong there. And I think with energy and the NAFTA, it just makes sense to be very bullish on Texas. And the areas we're focused on, like I said, are the I-35 corridor, DeSoto, Waxahachie, Cedar Hill. And we've made some great headway with the city planners. And it's just been a very great positive projects, and there's more to come with those. And they're all going to basically be the same thing, and they'll all be in the fund that we're building out to where we can just continually keep turning over the capital and raising there for those projects.
Yeah, awesome. Thank you very much. Let's shift towards personal side. Any habits that are helping you to be successful?
Habits, time management is very critical because I still work on the yachts as well. 6 weeks on, 6 weeks off. Just simple things like calendaring and just overall organization. Just the main habit that I do is every morning and night, I just go through what I did and then what I didn't do, and just take those 15 minutes to organize for the next day and organize for the next morning. And I do a lot of breath work in the morning, and that's in meditation. I think that's because in the morning we all can get up and our mind just goes on fire quickly. If you take a moment to be silent and sit for a minute, it'll give you a little more clarity into what your purpose of that day is.
Sure, absolutely. Share me any one personal learning that played major role in our personal or business life.
Okay, there was actually before I got into the boats, I lost my business and was laid off, and it was a tough year. I didn't know I was back in Jamaica where I'm originally from, and I wasn't sure. My whole everything that I was doing was in flux. And then a friend of a friend offered to give me a job on a boat in Fort Lauderdale, and I borrowed the money, and I borrowed the money for the flight ticket and went to Fort Lauderdale. Didn't really know anybody. Landed with about $20 in my pocket, and I never looked back because it ended up being probably one of the greatest things that happened to me. And with that being a tumultuous year, what I thought was a terrible year and everything was going wrong, it was where I needed to be. I had to go through that to get to this. This was something I need to learn, that sometimes you just have to sit back and let things come to you rather than trying to make things happen.
Awesome. So any books that impacted you?
Yes, and then I've said this one repeatedly. It's Brian Burke's The Hands-Off Investor. That's probably one of my favorite real estate books because it's written for the investor, and I'm an LP investor, a limited partner investor as well, and it's helped me more realize dealing with investors and raising capital that It's about the investor. Will this fill their needs? Is this something that they need? Because all deals are not for all people. So you can't, what I think is a great deal might not fit for you in your life at that moment. It might 5 years from now, or maybe it was 10 years ago, it was good for you. Or maybe it's not something that fits your risk profile or fits what you're doing in your life. So it's a great book because it just goes through all those things, gives you all those questions. It helped me come up with a list of questions that I always have for the sponsor or the fund manager, whoever I'm getting involved with. And I would suggest that anyone read that book and then just come up with their own questions that make them comfortable in investing.
Awesome. Thank you very much. How can listeners can connect with you, Scott?
They can connect with me on my website, investwithscottkid.com, has all my social media, all my email, phone number, everything on there.
Awesome. And thank you very much, Scott.
Thank you so much, Rama. I really appreciate you having me on. It was a great conversation. Thank you so much.
Sure.